Welcome back to Chartbusters. Well, as promised, we will be going to the management of Indo Count. Remember, Indo Count's subsidiary acquired close to 81% stake in US company Fluvitex. We are joined by Kailash Lalpuria, the ED and CEO of Indo Count Industries, to discuss the recent acquisition and the future outlook for the company. Good morning, sir. First of all, thank you so much for joining us. Give us a sense of what was the rationale behind this particular acquisition. You also have an option to buy an additional 19% stake. So what are the valuations at which this particular deal was done, and what is the outlook here?
So good morning, everyone. This is a strategic move in order to build the utility bedding business, and it's a pivotal step as well as the stepping stone to, make US manufacturing active in utility bedding, where there is a large opportunity, and also distribution across the US. So this is a strategic move which we have been planning, and it overall builds a full synergy to our bedding businesses because pillows are an important part of the product portfolio. And with the acquisition of Vamsuta, it also provides us in order to build up this business, which is brand, focused to distribute goods to both the existing customers and new customers in the US and Northern America overall.
Okay. All right. Hi, Mr. Lalpuria. Good morning and good to see you, Vin. It's been a while since we spoke. With regard to this acquisition, I'm just looking at it in the last few years. You have done revenues in the vicinity of around 25 to around $38 million approximately. But I believe you have ambitious plans. Could you tell us if in the coming year you can scale it up to, say, $50 million? Would that be something that you're looking at? And also in your current business, you do around mid-teens margins. On the acquired business as well, margins are around that 15-16%?
Of course, and that's why you see this acquisition has given us an opportunity to ramp up from the existing 30 million kind of revenue to almost 50 million within a year. Because the anchor customer, which is an existing customer with Fluvitex already, has also assured us a 4-year renewal and a commitment to buy goods from us on a continuous basis. So this provides us a visibility of almost 125 million with just the existing customer. And then we will be able to divert this production to our other existing customers over there. So overall, we look at a visibility of almost 50 million plus revenues in the very first year of operations post-acquisition.
And on margins?
Margins, of course, you see, currently it is a margin-making company already. It will be in the range of 15 to 16%, and our endeavor will be with capacity utilization, with product mix, which we are offering to the customers. We should be able to improve our overall margin profile as well into this business.
Mr. Lalpuria, at the end of Q1 FY25, you guided the street, to an FY25 volume guidance of 110 to 115 million meters. Now, with this acquisition, would you be looking to, go ahead and give an upsized guidance? Also, what will be the, resultant top line? Now we are almost at the end of Q2. So do you have better visibility in terms of what kind of realizations you'll be able to make over there? Also, the guidance you've given in terms of EBITDA is 16 to 18%. This acquisition seems to be at a slightly lower margin profile. So would you be at the lower end of the guided band?
Not at all. We are on track of the guidance which we have provided, 110 to 115 billion. And of course, this acquisition would help us captively consume to certain extent of our capacity. So it will further add up to our volumes going forward. But you see on the Q2, we should be able to better provide you, guidance post our earnings. Secondly, on the margin profile, as I mentioned, currently the capacity utilization is only 60%. And post this acquisition, we are building up the customer base and the product mix, which will help us scale up the margin to 16 to 18%, which we have provided for our overall business. Definitely, the capacity utilization will play the role of operational leverage, as well as you see the product mix, which we have completely on the bedding side, will help us scale up the product mix and offer both on the branded side as well as the non-branded sides to our existing customer and new customers, thus providing us the benefit of the margin profile.
Okay, all right. Mr. Lalpuria, just to get back to the acquisition that you were talking about, you're also getting 1.5 million quilts in that, I think so. And if I got it correct, the unitary pricing of a quilt in comparison to a pillow is nearly 4x. Is that a fair estimate, 4 to 5x?
Of course. And looking at all the logistic issues which, globally we are facing, quilt is an important part of our business profile, which we have acquired. And we should be able to also make, some sort of comforters and other field products over there. So definitely this will add up to the revenue and the margin profile.
Okay, all right. Now, how do you fund this? It's a small acquisition, $25 million approximately in total is what you'll pay. How are you positioned currently? What is the cash, the debt in your books as of now? You have an ambitious capex as well, I think, going ahead. So list that out for us as well. So what's the balance sheet looking like? And what is the capex plans for this year and the next?
So we all know that we have a robust balance sheet, and as a company, we have been conservative into drawing debt, and we will keep it like that. So our net worth is about 2,000 crores. Our long-term debt is only 175 crores on the books. Of course, we need working capital for the textile business, which is a 90 to 120 days cycle. So being conservative, you see the debt always will be drawn in order to fund the growth. And the board will appropriately take measures in order to fund this and finance this growth going forward too. So looking at last year, what we reported, the net debt was only 750 crores. So going forward, we will fund wherever there is a synergy of both revenue and margin. We will fund that growth both through internal debt as well as internal accruals as well as long-term debt. And so we will keep that. Yeah.
Yeah. So Mr. Lalpuria, running a little short on time. So you're saying you're very comfortable currently, but your capex plan is around 1,000 crores for the next few years?
So next few years, 1,000 crores you can always take into consideration, but we have already spelled out that the core capex is already over. We have built in a capacity of 153 million. We are at 110 level. So 2 years, we are looking at the similar growth. We are investing into zero liquid discharge, into solar power for optimization and improving our overall profitability going forward. So wherever there is a synergy, the board will take appropriate decision to finance the growth and will take on steps to see how we can grow our bedding business in the USA because we are at a leadership position.
Right. Mr. Lalpuria, you spoke about USA. Now, 3 countries, and request you to keep your answer a little short because we're running out of time. There are FTAs, that are already present as far as Australia as well as UAE is concerned. Also hopeful of an FTA with UK. Could you quantify the opportunity size for you for FY25 and FY26, and do these typically happen at a higher margin profile?
The FTA for us is a cherry on the cake. We are already existing in the UK market with an office distribution, in Manchester and Leeds. So we have the entire range of customer base from high street, say a John Lewis or a Marks and Spencer's, or you name any of the high street retailers. So we have a large customer base, but of course, the FTA would provide us more competitive edge in order to improve our overall competitiveness across the product segment, whether it is we are now positioned into the mid to high segment, but it will also give us an opportunity to explore not only the luxury segment, but also the below the mid segment as well, where Pakistan and Bangladesh are having the duty advantage. So once the level playing field is there with the FTA, we will have more distribution of our product mix and more, revenue will generate from this particular market. And we presume that what we have been informed by the government sources, that a lot of discussion has already materialized as far as the FTA is concerned. And there are only few things which are remaining from a policy standpoint in order to declare this FTA in the near term. So we are all hoping that this should help us, the entire textile sector to speeden up their growth into this area.
Okay, very quickly, Mr. Lalpuria, before we let you go, you seem to have laid out the capex and you're looking at brighter prospects for 2027. Are you on track to hit revenues of around 6,000 crores? And your VAP, value-added products, as a percentage of your mix is 20%. Where does it go to? What does it mean for margins? Very quickly.
So in FY23, Nigel, we had already embarked on a journey to double our revenue growth, and we are on track. Let me tell you, I'm glad to say that we are on track despite you see there are so many challenges out there and there are a lot of uncertainties still holding out. But we are on track to double our revenues in the next couple of years or 3 years maximum. And also the margin profile will improve both due to the operational leverage and the addition of the utility, fashion and institutional business, as well as the branded business, where we also have started, our journey with a bang, by acquiring this Vamsuta brand,
Right.
which is positioned into the specialty and departmental
Yes.
store categories.
Correct. So you'll double your revenues. What does it mean for margins?
Margins, of course, will improve. As I mentioned,
16 to 18%.
branded business.
16
No,
to
it
20.
will further improve. That's what we endeavor to,
Got it.
So
Right.
Got it.
that's
All
what,
right.
we are hoping for.
Got it, Mr. Lalpuria. All the best to you. You have done this inorganic growth. It's looking up for you. You're going to scale it up to $50 million. For the overall business, you're guiding for better volumes growth ahead and also margin improvement. Thanks a lot for joining in. For the time being, though, we slip into a short break. You come back, we'll continue to focus on markets and stock-specific action.